Chapter 6, Defining the Trend. In this chapter, we're going to really reinforce how to use the TDI in combination with the EMAs to identify trending versus counter-trending markets. That's going to allow us to build a watch list more accurately and identify trades that will have a much greater likelihood of profitability versus getting stuck in a counter trend trade that might chop you around all day. So let's get into it. Defining the trend. There's three main questions that you want to ask yourself when defining the trend. Number one, what is the direction of the EMAs? Number two, what is the positioning of the liquid 50? Is it in the buy zone or is it in the sell zone? Has it been in that zone all day? Those are two little side questions for number two that you want to make sure you write down and ask yourself as well. You also want to ask yourself, what is the value of the RSI? Numerically, is it 50, 60, 30, 20, 8? What is it? And is it overbought or oversold? So those are your three main questions that will help you define the trend. The direction of the EMAs, we're going to talk about it. The positioning of the liquid 50, we're going to go into that a lot. And we're going to go into the value of the RSI, being overbought, oversold, or being tradable. So right here, let's start with example number one. In this example, we're going to ask ourselves the three questions. Number one, what is the direction of the EMAs? Well, here, trading around 9 a.m., you can see the 9 a.m. down here at the bottom. Trading around 9 a.m., the open of the New York session, you can see that the EMAs start to fan up. All the EMAs start to point up. And even here, the shorter term EMAs are above the blueberry, above that longer term EMA. We know from previous slides that that tells us that this is in an uptrend. Now we need to confirm that with the TDI. The TDI doesn't really look good until the liquid 50 turns up and crosses into the buy zone right here at about 6 a.m. So to answer question number two, what is the positioning of the liquid 50? Well, it starts in the sell zone, but moves into the buy zone when we would be looking to trade it during the New York session. Then we want to ask ourselves, what is the value of the RSI? Is it overbought or oversold? Well, it hasn't hit overbought, and we're trying to go long, so that's a good thing. And we can see here, right in here, when we would be looking to trade, the value is at about 60. So that's perfectly tradable. So not going any further than that, because we're not talking about entries right now, we're just talking about trend, you can clearly see that here, with this RSI above the trend line, above the liquid 50 in the buy zone, EMAs pointing up, candles above the EMAs, we find an uptrend, and look at the breakout long. Huge move upwards. Let's go to another example. Here, we can see a really nice, over 2 days, you can see from day one here, separated right here, to day two, you can see a really nice liquid 50 in the buy zone for, wow, like over 24 hours. Never touches overbought, and the RSI value never gets higher than like 68.70 right here, or 68.69. It never touches 70. So that's great. This would be a really nice RSI TDI to watch for multiple days. You could trade it long potentially here, day one, and then again in London, right here, day two. This is right before 6 a.m. You can see the 6 a.m. time right here. So you, by identifying trending trades, by identifying liquid 50s that are in the correct zone, we have it in the buy zone here. Look, if it's still in the buy zone for 2 or 3 days straight and it hasn't hit overbought that day, trade it long. It didn't touch overbought this day, trade it long. Look at each day individually, but also be able to zoom out and see like this, wow, we're in a clean uptrend. I should damn sure better not be going short on this thing. I need to only find long opportunities. How do I do that? I use the RSI and the liquid 50 in the TDI to identify when I should be getting into these trades. Let's do another example here. Direction of the EMAs. What is the liquid? Let's do another example here. What is the direction of the EMAs? Candles are above them. All of them are pointing up left to right, so clearly pointing upwards. What's the positioning of the liquid 50 in the buy zone? And what is the value of the RSI? Well, right here at about 6 a.m., it does hit overbought. But beforehand, it was perfectly tradable. It was at 60, it was down 50, came back up towards 55, so perfectly tradable. Once I show you how to identify the entries within this trend, you're going to make a lot more sense of these RSI crosses that you're seeing. These are going to be your entry signals. But just for right now, I want you to grasp from these examples that when the EMAs are pointing up, the candles are above the EMAs, and the liquid 50 and the TDI are in the confirming zone. Like here, EMAs say up, TDI is in the buy zone, that means we're going long. That's a really good indicator to put this on the watch list and wait for those entries on the smaller time frames. That's how you're going to make money using the S2. Another example here, we're going to show you a short example. So you see the liquid 50 moves into the sell zone overnight, right around midnight. The direction of the EMAs is clearly down. The candles are under the EMAs all day, especially the 800. And the RSI value doesn't hit oversold until right here. It touches 30. So back in here, there's potential for a sell. There's absolutely potential for a sell. You have the RSI under the liquid 50 in the sell zone and under that red trend line. You're starting to see that that's going to be the entry signal, I hope. Now let me explain to you what reset is, because reset is really important to understand to keep yourself out of bad trades. This is the accumulation phase of the market. You'll see it a lot of times in Asia where the high and low are set, and it's always reset. It's always choppy. This creates identifiable ranges that are monitorable and can be labeled with initial high, initial low for potential breakouts off of those levels. Don't fear reset. Just wait for it to break out. Don't get involved in reset. Analyze and wait for it to break out. I'll say it one more time. Don't be scared of reset. Analyze and wait for it to break out. Let's identify a few examples of what a TDI coming into reset would look like. So here we can see TDI started the day. Again, here's that period separator. I want to make sure you guys see that. You can see the TDI started the day very low in the sell zone. Liquid 50 was down here close to 30, probably around 35 or 40. Moved up towards that stationary 50 value all Asia. The entire Asian session, it moved up towards reset. So this is something that we would just avoid trading completely. You see here my notes say liquid 50 and RSI are rising towards the stationary. You have no trade. EMAs are saying sell. TDI is rising in the sell zone towards reset, so you have no confirmation. There's no confluence of indications here. So just don't trade it. Take it off the watch list. The worst thing that happens is you miss a winning trade. Boo-hoo. There's money every single day. Get over it. That's going to happen all the time with this. If you cannot let a winning trade go by, you are not going to make it in trading, especially with the S2 pattern, because there are so many trades every day. You need to be picky, and you need to be grateful for what it gives you, not overtrade and not get into shitty trades like this. Another example here, liquid 50 starts lower, moves up towards that stationary 50. The EMAs are saying, well, you should be selling this pair. Well, we can't because the TDI is moving higher. Doesn't work like that. If we were going to sell this pair, the TDI would need to be in the sell zone moving lower. This doesn't make any sense. This is called divergence. We're going to identify this in a couple slides. I'm going to show you how to draw the reaction points and really identify the divergence for yourself. But when you have disagreement, meaning the EMAs say sell, TDI says buy, don't trade. Let it go. If you miss some money, boo-hoo. Another example here, coming into reset. Why? Austin, that TDI looks awesome. The liquid 50's in the buy zone almost all day. It's right above 50, but it's not overbought. This looks good for longs. We should be looking for longs. Yes, on the TDI, but that's not every parameter of the S2. We're going to get into this in a little bit. You have the 800 EMA above you. Now, you can trade to the 800 EMA if you like, but to qualify as a trending trade, you would not go long towards the 800 EMA above you. If you wanted to trade with the trend, in this situation, you would want to go short below all of the EMAs because the long-term EMA is above us. So in this situation, the advanced people might choose to take it long and try to trade it to the 800 EMA. God help you, light speed. But the rest of us, earthlings are going to just let the counter trade trends go, and we're going to wait for the trending trades when they come, and we're going to smack them with a nice size position and make a good amount of money while you sweat it out in these counter trend trades. Now, when we're defining the trend, we always want to draw our trend lines on the RSI first. The RSI is a part of the TDI, and what did I tell you? The TDI does not lie. You want to match those reaction points identically above the RSI on the candle points to identify divergence or confluence. Divergence is when the candle direction does not agree with the TDI direction. Confluence is when the candle direction does agree with the TDI direction, meaning if the TDI is in the buy zone and the candles are above the EMAs and the EMAs are pointing up and we should be going long, you have confluence. TDI in the buy zone, EMA say buy. Where's my entry? If you have the TDI in the buy zone, but the EMAs are pointing down, you have divergence. You shouldn't be trying to go long into that situation. You should be waiting for the short entry. Wait for the TDI to agree with the EMAs. Let me explain divergence a little bit more. When price moves in the opposite direction of some technical indicator, we have what's called divergence. We're going to focus on the RSI within the TDI. And when you draw the divergence, you want to line up these reaction points exactly. You cannot be off with your reaction points. To identify the divergence, you're not going to want to trust your eye. I promise. You need to draw these lines, and you need to make sure that they match identically to the corresponding candles above them. If the candles are moving up and the RSI is moving down, we have divergence. And if the candles are moving down and the RSI is moving up, we have divergence. Here's a good example of a divergent trade. You can see from the first reaction point here on the RSI to the second reaction point right here where the green line touches my pink line, to now actually a third reaction point that was created right here, we are moving up. The RSI is clearly moving up. But are the candles moving up? No. So how would we react to this if we were in a trading situation? We wouldn't trade. We're waiting for the divergence to be broken. If the RSI decided to break down through the pink line, breaking my divergence line, then we would say, okay, now we can look for potential shorts. Why? The EMAs are crossing down, telling us we're going to sell. The candles are below the long-term EMAs, and the RSI is coming through the liquid 50 under the trend line in the sell zone. You see we're under the stationary 50. This did not hit oversold, so we could still look for short opportunities if the divergence line was broken. But until then, you need to trust it. These reaction points here and here match identically on the candles here and here. That's very important, and you need to trust it. Again, another example. TDI is in the buy zone. Candles are moving higher. See, they're making higher lows, higher lows, higher lows, higher lows, but the RSI is making lower lows, lower lows, lower lows, lower lows. So yes, there's money to be made if you somehow got in long and you popped a little money in there. Absolutely. But that's not for us. Just let it go. That's why you use divergence. You use the RSI and these reaction points. You can see I matched it perfectly. Here, 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 and here. I missed this third one a little bit, but it didn't matter because the first two are all you need. You really only need 2 reaction points to create the line. Next example, you can see the RSI here from the first reaction point down here to the second reaction point up here right after 6 a.m. RSI is moving higher. However, the candles are moving lower. Just avoid it. Use these lines to keep you out of trades. You could see that this TDI, because this came into the sell zone, you would say, Austin, we got to go short. We got to go short. I would say, relax. Just relax. Does the divergence get broken? Let's see. If you extended this pink line out a little further, you could see that not really. Maybe a little pop under there, a little pop under there, but never does it get broken, and there is no move short this day. Now, yeah, in Asia, the next day it falls, but during the trading day here, you can see there is no move short. The reason we were able to avoid getting trapped is because we identify divergence and we see that the RSI does not break through the divergence line, and it also doesn't even get under the liquid 50. So it's not even close enough to being a full S2. But the divergence keeps you safe. Again, you can have hidden divergence on the top here, where you have the RSI falling in a downtrend here, but moving upwards to these 2 reaction points here. Just telling you, don't trade. Stay out of this. If anything, this is going to fall. Even though you're above the EMAs here, don't go long. You're not going to get any more money out of this. It already hit overbought, and it does not break through the divergence point. So it falls. And look what happens to the candles. It falls. So the divergence, again, not an entry signal, just keeping you out of a bad trade. Saving the money, keeping it in your pocket. One last example of divergence. You can see here, RSI hit a bottom, moved higher, created another reaction point here. This would tell us the RSI is in an uptrend, and this is going to move higher. Even though we're in the sell zone, you trust that RSI, what happens? Candles go straight up. You can see it's divergent from the 2 points here and here. So it's a very technical based strategy when you're trying to draw these divergence points, but understand that it's very important. You start on the RSI, confirm it with 2 points, match those 2 points on the candles, and you'll very clearly see which direction the RSI is moving. Now let's talk about confluence. Confluence is identifiable by two reaction points, just like divergence is. The candles in the TDI must match, and just as an inverse of divergence, if the candles are moving up and the RSI is moving up, you have confluence. Candles moving down, RSI moving down, confluence. Let's get into it. So you can see we had our first reaction point here, matched it to the second reaction point right here, matched those up on the candles, and created the confluence lines, the structure lines. Now, when the structure line is broken here with proper parameters, you're looking for a potential trade. Now, because you can see my period separator right here, we had not hit oversold yet for the RSI for this day. You had the RSI coming through the liquid 50 under the trend line and breaking that structure line. You would be on the smaller time frames here looking for an entry. It's very important. Again, more confluence. Reaction point here, reaction point here, here, matches with this. Look at how it holds that trend line so cleanly all day long. It's just basic structure lines. Point 1, point 2, you draw on the RSI first. I can't tell you that enough. Point 1, point 2, it holds it perfectly. You're in the sell zone. You could be looking for potential shorts in here as well. More confluence again from the start of the day. Your reaction point is here. You match it here. Start of day, right here, very clean. You're looking for longs right up in here. As the RSI comes through the trend line above the liquid 50 before it hits overbought. Now I added a couple little indicators to show you this fell 59 pips. You can see it right here. So the way that this tool measures pips, just so you guys understand, there's no decimal point in it. So if it says 590, that just means 59. If it was 592, it would be 59.2 pips. So up here, the stop loss is 7.9 pips. But again, let's just focus on the structure. Confluence, you have reaction point 1, reaction point 2, reaction point 1 on the candles, reaction point 2 right here in the pullback, move through the structure. You look for the shorter time frames for the precise entry. The number one thing when identifying confluence and divergence is that you're honest with yourself and you're accurate when drawing the lines on the RSI first. Start with the TDI, then match those reaction points on the candles, and promise me that if you can't read it, if you can't identify clean structure, then it's probably not clean enough to be trading. So don't get involved. Use the divergence to keep you out of fake outs, and use the confluence to make you feel extremely confident in those trades. In the next chapter, we're going to add to the trend lines by creating market structure. These structures and the triangle formations that I'm going to explain to you are going to be the essence of the breakout trades that we try to take with the S2 pattern. You now should understand how to identify the buy zone and sell zone with the TDI to know if we're going long or short. You should be able to identify the trend if the EMAs confirm what that TDI is telling us, and you should be able to successfully draw confluence or divergence by using reaction points on the trend line, or on the RSI, first, by drawing reaction points on the RSI first and matching them on the candles second to identify which trades we should be trading. Now, let's add the market structure in and really start to piece this thing together.